Welcome to today's conference call of Volkswagen AG with a view to the publication of the half-year results. For your information, this conference will be recorded. I'll hand over the floor to Pike von Bestenbostel, Head of Volkswagen Communication. You have the floor, sir. Ladies and gentlemen, good morning from the Volkswagen plant in Wolfsburg. Welcome to the half-year figures and the report on this of the Volkswagen Group. A very special first half year of 2020 is behind us with special effects on the business development. You get the information from Frank Witter, member of the Group Board of Management for Finance and IT, and Christian Dahlheim, Head of Group Sales. After presentations, as always, you will have the opportunity to ask your questions. And with us, I hand over to Frank Witter.
Thank you very much. Welcome, everyone. Thanks for joining our call this morning. Now, it has been a few months now that we all have had to have experience in dealing with COVID-19 and the impact of COVID-19. You can also see in our performance in the first half year, but we also see signs of a recovery and normalization. The second quarter, as we expected, was difficult, but it was slightly better than originally expected because from month to month we've seen signs of initial recovery. Generally, I'm very satisfied with how we manage this crisis. We see a safe working environment, and we've made some good progress also in terms of managing our working capital. And before we talk about the results of the first half of this year, I'd like to mention something other that's very important, namely the latest changes in management and also organizational changes. As you know, the structure of our group is rather complex also compared to other players in the industry, and it is not easy, of course, to reconcile interests of all stakeholders, especially if you bear in mind the extent and consequences of the massive transformation of the automotive industry. And of course, it is not acceptable either that there's so much internal information that's leaked to the public, because this is clearly damaging the company. I've said on a number of occasions that smoke from Wolfsburg is also a sign for a compelling struggle for the ongoing development and the transformation of our company. And the key message is, however, that the Supervisory Board and the Board of Management are in full agreement on our objectives. And our CEO, Herbert Diess, is leading the strategy implementation. And please believe me, his ambition and drive to bring about fast and durable change have not changed. And in the recent past, as you know, there also has been some management reshuffle on key positions in our group. In an organization the size of our company, from time to time there is a necessity to set new priorities, also to respond to changing conditions. Now, as we grow our strategy, some focus may be shifting and certain roles are continuing to develop further. Now, with our new leadership team, we are in excellent shape to handle those ambitious responsibilities and tasks. And at the same time, we're very grateful to the present or previous incumbents for what they have done and for the footsteps they leave for others to follow. And for me personally, this is no contradiction at all. Now, let's move over to talk about dividends. You may have seen in our press release published earlier today that the time of our annual general meeting has been announced earlier today, which is going to be held on the 30th of September. We have also made a revised proposal for dividend payout for the fiscal year of 2019. Now, we believe that this is a very balanced decision, and I'd like to shed some more light on this now. Ever since the diesel crisis broke in this company, we've always focused on achieving reliable and good operating profits and also to achieve the milestones we've set ourselves for our indicators and KPIs. Now, we have made the first announcement of the proposed dividends in February, where we are not aware of the dramatic impact of the COVID-19 pandemic. And against this backdrop, and also bearing in mind that it's very hard to predict further developments, we've tried to come up with a good balance of interest, also when it comes to the expectations of our shareholders, the liquidity development of the company, and the stability of our rating. There's no doubt whatsoever that we are committed to our strategic goal of a dividend payment out ratio of 30%. However, for the fiscal year 2019, we're coming in at only about 18% and not 24%, 24.5% in fact, that we've planned for earlier. And now I'd like to talk about our business figures in the first half year. As you all know, customer demand, especially in the second quarter, has been severely affected by COVID-19. Our vehicle sales across all the regions has been severely declining and is now at 1.6 million units below the previous year. As a result of that, revenue declined by more than 23% and comes in now at 96 billion euros. The operating profit before special items was at minus 0.8 billion euros. Now, this result also includes the fair value designation of derivatives outside the hedge accounting, which in our case is mostly commodity hedging, with a negative effect of 0.7 billion euros, and foreign exchange impacts with an additional charge of 0.2 billion euros. On the other hand, we've had a positive one-off effect of about 0.8 billion euros related to the transfer of AID to Argo. And this was because the transaction value was significantly above the book value. In the second quarter, we had to recognize legal risks from the diesel issue and special items to the tune of minus 0.7 billion euros. For the first half year, net income before taxes was minus 1.4 billion euros. The posted net cash flow of the automotive division was at minus 4.8 billion euros. The net liquidity of the automotive division was a robust 18.7 billion euros. And just in a few minutes, I'll talk you through the results of our individual brands. But before I do that, let us listen to Christian Dahlheim, who will talk to about our sales figures now.
Good morning, ladies and gentlemen. I would also like to welcome you for this conference call and would like to present the sales results of the first half year to you. Corona outbreak left its traces in the entire automotive industry and had a negative effect in both quarters on the delivery results of our brands. In the second quarter, however, we were seeing a clearly positive trend. Volkswagen Group in the first half of this year delivered a total of 3.9 million cars to customers worldwide, which is a minus of about 27% year on year. Our premium and most of all our luxury brands were less involved than our volume brands and the business unit of truck and bus. Let's take a look at performance of our deliveries to customers in the different regions. Focus is on the development of the first months of the recent months in the year-on-year comparison. In the region North America, in line with the markets, our deliveries went back by about 26%. After delivery performance of the first quarter in March became negative, coronavirus in the second quarter led to a decline of a total of 38%. April was the lowest point in the region, about minus 50%. In May and June, there was an upturn of customer demand since lockdown measures were loosened and operation were resumed in the production and dealership sites by and by. In the United States, our performance year on year came from minus 43% in April to minus 19% in June, whereas Porsche almost reached previous year's levels. In Canada, we reached in sales in June almost previous year level. Western Europe, passenger car deliveries were at a minus of 38%, whereas the overall market went down by 40%. In an already tense environment from March onwards, all of the main markets were hit by corona. Decline in demand and the strict lockdown of the market meant decline of deliveries in the second quarter quite strongly. In month April alone, there was a decline of 80%. With reopening and loosening of requirements, our delivery performance in May and June was better, albeit at a lower level and depending on the markets. In June, our total deliveries went down by 30% year on year, but were more than 70% better than in May, and this was above our expectations. In Central and Eastern Europe, deliveries, just like the market, went down by 26%. All of the markets were hit by the lockdowns because of COVID-19. Moreover, Russia had a clear decline of oil deliveries. After positive performance in the first quarter, deliveries in Russia in April and May were declining by about 60%. In June, we saw great recovery, which was only minus 13% below previous year level. Since the beginning of the year, we were able to step up our market share in most important markets of the region. Deliveries in other core countries like Poland and the Czech Republic have seen major progress in June since the borders were opened and the restrictions were loosened further. South America region, our deliveries went back by 34%, whereas the market had a decline of minus 41%. After a slightly positive Q1 performance in Brazil, sales in Q2 went down by about 60%. Deliveries in April and May were strongly influenced because the coronavirus spread and lockdowns, including closures of borders, were carried out. Deliveries in June showed an upward trend. Since the limitations for economic activities and life in society was again improved, 80% of our car dealerships were opened with certain limitations. In Argentina, deliveries, however, shrank by 34% since beginning of the year. But we have a recovery compared to previous year in the month of June, albeit at a low level. Mid of June, almost 80% of the Volkswagen dealerships were reopened. In the region Asia Pacific, deliveries went back by about 17%. Since beginning of the year, the total overall market went down even further. Despite the effects of COVID-19 in China, which led to a negative first quarter, we saw a continuous recovery trend. Dealerships were reopened, production went back to a normal level. In April and May, with the deliveries, we were clearly increasing. In June, these year-on-year were only slightly declining, only minus 4%. Due to the higher sales levels in June 2019 in the context of the change of the emission standards, this was to be expected. Therefore, we don't see it as a sign for weakening of the markets. We ended the second quarter with a positive growth of almost 1% year-on-year. Our core brands, despite the pandemic effects, showed great level of resilience. In particular, Audi, Porsche, our new brand Jetta, delivered excellent performance. Moreover, our SUV strategy, with a growth of 9% in this segment, has shown that Volkswagen brand strengthened its position as a number one, and this continues to be the key to the success. In the first half, we won more than 1% of market share in China, and we're planning to keep this. In summary, we can say that on a monthly basis, we have a recovery trend coming from the deepest level in April. In each region, it has a diverse take-up. The recovery is led by China, which has been growing since April. Europe shows a positive trend. We were outperforming the market in each and every month of the second quarter. As we all know, the degree of further recovery and the speed depends on the order of magnitude of the virus, of the outbreaks, of containment, the financial power of the individual markets, situation of the health systems, and adequate state countermeasures play an important role. Each and every forecast on market and sales development will remain very volatile. Various markets were harder hit than previously expected, which has an effect on the economic situation and the short and mid-term demand. Loosening of corona measures and subsidy programs on the market give us reason for further hope that demand will continue to grow from July. From today's point of view for 2020, we expect a worldwide market decline in a bandwidth of between 15 and 20%. Forecast for deliveries to customers should be a bit better than the overall market development based on our strength in China and a strong and new product portfolio, an increasingly growing SUV share, a broader range of new electric cars, and many completely upgraded models. The worldwide recovery dynamics and market share gains confirm this. In Western Europe, we see a positive trend in incoming orders. In the individual month of June, they have reached previous year's level. Order entries in Germany were clearly above the numbers of those in June 2019. Delivery numbers for July now come in, and it looks as if in this month we have a one-digit negative percentage deviation year on year. Moreover, We can count on a strong and agile dealership network, and we have expanded our online sales opportunities. I can't close without mentioning the status of the ID.3. We are starting with a new era of electromobility. The ID family is going to be a game changer. Market launch will be in September. Interest of our customers is great. ID.3 will first be delivered to pre-orders and can be ordered since last week for all of the customers. It's the first car on the basis of our new modular e-drive system, the so-called MEB, which successively will be rolled out all over the world and will be playing a decisive role when reaching our targets of a battery electric vehicle share of 5 to 6% in the EU 28 countries this year. Our MEB-based product drive will be continued with the ID.4, the Audi Q4 e-tron and the Skoda Enyaq. Now over to you, Frank.
Thank you very much, Christian. And this is a perfect segue now to look at the performance of our brands in the first half year individually. Now, we start with the brand of Volkswagen passenger cars. They concluded their first half year with an operating loss of 1.5 billion euros. The reduction of fixed costs by more than 5% could not compensate the drop of about 40% in unit sales and the resulting drop in revenue by 35%. The regions of North America and South America were particularly hard hit by COVID-19. The Mexican factory was shut down the longest, which had a particular impact on the US market. Audi also had a tough first half year and has shown a largely volume-related loss of about 0.6 billion euros. And that happened despite the windfall profit of a pro rata 495 million euros from the transfer of Audi subsidiary AID to Argo. In the first half year, the charges related to the fair value designation of derivatives and hedging to 0.5 billion euros. The demand in the premium market has generally recovered better than in the volume segment, but there have been issues like the prolonged closure of the Mexican plant had a negative impact on the high-margin Q5. Now, with Markus Duesmann leading the brand, Audi has redefined Vorsprung durch Technik. But to turn that into driving up premium margins is not going to happen overnight. And Audi, therefore, in the second half of the year, will have to work very hard to make sure that those positive results can also be seen on the bottom line. Porsche cars delivered a strong double-digit margin of 10.2%. The top premium segment, as was expected, performed much better than the other segments. So there have been solid volumes, a positive mix, and a quick recovery in China that were the major drivers to achieve that. Skoda achieved a positive result of 0.2 billion euros. The solid development of volumes, especially in June, has mitigated the impact of COVID-19. Seat, in the first half of this year, could not avoid a loss of about 0.3 billion euros. Here again, the reason was this massive loss of volume, especially in Spain and other relevant European markets. The operating profit of Volkswagen commercial vehicles, with a revenue drop of 35%, reduced to significantly minus 0.3 billion euros. Those were related to volume losses and higher CO2-related costs. And now let us have a brief look at our truck and bus brands. Traton's industrial business, because of the pandemic, has witnessed a significant demand slump and as a result, a revenue drop of 26% compared to the same period in the previous year. This effect could, however, not be compensated with cost savings, so that the operating profit decreased to minus 0.3 billion euros. The operating profit of Scania Vehicles and Services in the first half of the year was at about 0.2 billion euros, so it's still in the black. The reduced fixed cost and a resilient service business has made sure that that volume drop was potentially compensated. MAN Commercial Vehicles posted a loss of 0.4 billion euros because of volume shrinkage. And as you know, just recently, we have announced far-reaching restructuring in that company that also will lead to significant headcount reduction. Then Power Engineering, which refers to MAN Energy Solutions and RENK in the first half year, have achieved a positive operating profit of 21 million euros, which is about half only of what they have done last year. And in terms of MAN Energy Solutions, we see the necessity to restructure the business and to make it future-proof. Our financial services division, also in this first half year, came in with an operating profit of 1.25 billion euros, and it has turned out once again to be an important pillar for our profits, but also it is a reliable partner for our brands and the retail business. And then finally, ladies and gentlemen, let me talk about the outlook for the whole year. We generally maintain our outlook as posted in the first quarter. The situation continues to be very volatile. And if we were to specify target ranges now, would instill a fake sense of accuracy. And it's true that we see a potential recovery and normalization, but no one can reliably rule out a second COVID-19 wave or can really reliably predict the future developments globally, which means that the speed and the extent of any economic recovery is not reliable. So for all regions, what is important now is to stabilize economies and to further grow customer demand. However, the upswing we've seen in China has shown what is indeed possible. And with that, let me close. Please rest assured, we have in no way written off 2020, and we continue to strive for the best possible results. And with that, it's back to Pike, so we will get started with our Q&A session now.
Yes, Frank, thank you so much. And this is that we start in the round of Q&As. And I think Jan Schwarz from Reuters is the first on the line. Jan, your question, please. Yes, thank you. I hope you can hear me. Yes, we can hear you, is the comment. So, thank you so much. Good morning to everyone. I would like to know, when you talk about the savings, as to whether at the group level you have any further plans to follow up on that, and you have referred to MAN. So what about the Volkswagen brand here? Will you work without any further endeavors? And the second point, of course, is the look at the fringe areas. I would like to know whether you can give us a current status on your plans, Ducati and other brands. That would be quite helpful. Thank you. Answer, Mr. Witter. Good morning, Mr. Schwarz. From my comments, it was supposed to become clear that in each and every area we do zero-based budgeting with challenge boards. So every payouts we actually use one-man coverage as would do it in football. And you can see that we've moved forward. The restructuring that we announced with the both MAN companies, you have referred to them, but this is true for all of our companies and for the group divisions that we are massively working against it. We are putting a question mark behind each and everything. With programs like the Pact for the Future and Audi plannings, we have set the stage correctly to work on this, and it's important to do it. And you can see that we have made progress when it comes to personnel. Restructuring will again speed this up, but generally speaking, we're in a good position. You will strictly closely accompany all the payouts, all the marketing measures, etc. And up until now, we don't expect that we'll go beyond what we have described already. Then you talked about fringe areas. Well, you know that reduction of complexity of the group is something which has been important to us for a long period of time. RENK, we take it that by the end of the year, this will be concluded. parameters with MAN Energy Solutions as regards the market side are rather difficult, so that at the moment we are focusing on restructuring and will not pursue the way of selling it, which is due to the rather difficult market environment. And apart from that, you know that I'm a bit moving out of it for good reason. As the Group Board of Management, we have a clear view that further focus and priority giving in the group is important, but furthermore, we are not going to speculate in the public which of our assets that could relate to, because out of experience, we know that this makes such discussions rather difficult, but you can continue to take that the Group Board of Management has ideas and a very clear opinion. Before we continue, says Mr. van Bestenbostel, I'd like to ask the operator to please give us the technical hints for the round of Q&As. Thank you. Yes, I would like to do that. Operator says, in order to ask a question, press the star button and number 1 on your phone. Make sure that mute is deactivated so that the signal can reach our devices. So once again, it's star 1 in order to ask a question. Press star 1. Pike van Bestenbostel says thank you, and then we continue with Edward Taylor from Reuters. Edward, please. Thank you so much for allowing me to ask a question. My question is, how do you want to increase the value of the share price? It seems that further cost-saving measures in Lower Saxony have become rather difficult because of the headwind coming from the Works Council and some of your top people who have started efficiency measures, but they were put on hold. So what would you see would be the success promising strategies as to how you can move up the share price? Could you imagine to lease out parts of the company or sell parts of the company? Is that something you think about, or is this not the time to do so? Thank you. Good morning, Mr. Taylor, says Mr. Witter. I think I've started to refer to it when I answered the question coming from your colleague, Mr. Schwarz. Yes, we can imagine to go this way, but at the moment we cannot announce more than what we have published here. But of course, we do have our ideas. So we believe that focusing the group on the most important core areas is an important and right step, with a view to the management attention that we want to give to the various units. We have a very precise strategy for the entire group. So implementation and focusing, and also knowing where we can put our investment, that's very clearly delineated. Value of the share price, that's something which has been with us for quite some time. We are deeply convinced that the true value of the share price is not visible on the stock market, so that's something which we are heading for. Of course, we have to work on costs. That's one aspect, but of course it's only one of many. As regards the cost side, I would like to clearly confirm to you that we do not feel curbed or limited. Of course, such discussions are never easy, but when we talk about the two MAN companies, for example, then at the end of the day, this can only be done with agreements, but we take it that we'll end up with agreements. And you know, Pact for the Future and Audi programs are there, and reducing the number of personnel will be done there in a socially acceptable manner, of course. So we'll move forward, but it's rather a complex and difficult matter. Nevertheless, we do believe that increasing the value through focusing on priorities of the group is important, and continuously delivering on what we want to perform since 2015, reliably deliver what we promised, and the corridors for performance indicators that we published for 2025, in particular the operating margin. Those are important issues. The electric drive, confirming that we have a clear concept, delivering on it. Christian Dahlheim talked about the ID.3 that will come on the MEB biases, the Taycan, the Audi e-tron, and there's much more which is in the pipeline. So once these convincing products find and create enthusiastic customers, it becomes clear that Volkswagen Group, with economies of scale, has a good opportunity to be very successful in the transformation. And I hope this is something which we should see in the valuation.
Gehören da alle Marken dazu?
Da nichts anderes angekündigt ist, ist das im Moment so.
No other announcement has been made, so that is the case. Next question comes from Olaf Preuss from Welt. Good morning, everybody. Question for Mr. Dahlheim. What about the availability of electric vehicles at the moment? The purchase premium seems to be going down well in the market in Germany here, but there's talk about the e-up having a 1-year waiting list, and for the ID3 we know, also given the corona pandemic, it's going to be very challenging to produce 100,000 ID3s and ID4s in Zwickau. So can you say a word or two on the availability of electric vehicles? And also when it comes to other subsidiaries, please. Good morning, Mr. Price. I'm happy to do that. Your observation of the e-up is certainly true. We have very long delivery times, which in a way is good because there's positive demand for this vehicle because of the government premiums paid, which for smaller vehicles comes to very compelling product offers. But it also shows you that people really are interested in buying electric vehicles. The e-Golf, with the changeover to the new Golf, has been phased out. So yes, it is right that the ID3 and the following models will be covering this positive demand. But yes, you're right, we have long delivery times for the e-up. For the ID3, we have good incoming orders, but we're talking about delivery times much lower. So we can deliver as we speak, and the same is going to be true for the new models as well. The Skoda Enyaq, the Audi e-tron, and also the Audi e-tron is already on the roads. So we're talking about typical delivery times, which are anywhere between 6 weeks and 2.5 months for existing models. So going forward, we also think we come back to a normal level of delivery times there. And with that, we move over to Christian Hetzner from Automotive News Europe, please. Good morning, everybody. I have 2 questions. One for Mr. Dahlheim and one for Mr. Witter. Now, just this morning, Renault has announced that they're going to increase the CO2 expectations of their fleet. Now, Mr. Dahlheim, can you make an assessment about the potential risk for you with your carbon emissions in the fleet? Will you be able to meet the carbon emission fleet targets? Do you expect any fines to be paid? And a question to Mr. Witter. And that goes back to corporate culture. In the monitorship, corporate governance or good corporate governance is to be improved. This is one of the findings of the monitorship. And a number of campaigns have been conducted, the integrity campaign at Volkswagen. But be it as it may, there is a problem in China at the moment that is gaining attention, which is related to the Urumqi operations. What would be a way forward, you think, to fix that problem? Now, could you possibly just hand over your plant at Urumqi to your Shanghai partners? As a dowry, if you will, in order to rectify this rather negative story that has been related to this plant. Answer? Mr. Hetzner, I'll take your first question on carbon emissions. Now, the brief answer is yes, we assume that our CO2 compliance will be met and no fines need to be paid. But that was a proviso, and let me say that the second half year will be marked by clear volatility when it comes to automotive demand and also the demand for internal combustion engines. So as we see it now, our plans stand at meeting CO2 compliance with a number of vagaries that are related, obviously, to the COVID-19 pandemic. And this is Mr. Witte. Well, Mr. Hetzner, I welcome the fact that you have been echoing corporate culture here, and good corporate governance, compliance and integrity, more so than for many other companies, is really a stringent commitment for this organization, especially as we come out of the diesel crisis. And it's a clear understanding for us that the standards and the commitments will have to be rolled out worldwide, which is true for all operations, including China. And I think it's going to be an important contribution towards that, because in our production plans, including all of them, of course, we are living out those values and putting them into practice. And in a joint venture operation, we don't have as much leeway as we would have with a wholly owned subsidiary. But it doesn't mean that we still need to make good progress. There are regional discrepancies, that is certainly true. But I do think that our working conditions and our standards, including at the Urumqi plant, is something we want to apply and is exactly the right way forward. So therefore, there are no other considerations relating to this plant. Which means as long as you continue to operate this factory, every time something comes up at Urumqi, when questions is raised about those re-education camps and forced labor, although it doesn't affect you directly, of course, but the fact itself, the plant is located in that city, it doesn't change anything in your plans going forward? Answer, well, there is this risk, that's true, but I think for people it's the best contribution we can possibly make, and we feel committed to continue those operations. And we knew from the start it's not going to be easy, but we're moving forward.
Then I would like to hand over to Hilke Janssen from the NDR. Ms. Janssen. Yes, good morning. Thank you so much. A couple of questions have already been asked, but I have one question. The German plants have now gone to their factory holidays. My question is, once you resume after the holidays, what capacity will you have? Will it be 100%, 80% utilization? What is the planning? Thank you. Mr. Witter. Hello, Ms. Janssen. It's no secret that before the factory shut down for summer holidays in the German plants, we have not been at 100%. We were at around 60 or 70%. That's what I have in the back of my mind as an average number. I take it that if during the factory shutdown and summer holidays no dramatic changes will happen, that it's this order of magnitude that we'll start with. Of course, it varies depending on the individual plants, depending on the product, depending on the demand. And this path that we have pursued after the COVID lockdown to move up production in a targeted manner and closely linking it to customer demand, that is exactly the right path. From my comments, you were able to hear that that we made major progress when it came to inventory levels in March. We were rather put on hold. Then we had too many cars and vehicles in the pipeline, and now we are well on our way to move forward. In so far, I think this is about the order of magnitude. Of course, it varies depending on the plants. That's the average number for restarting. Thank you. Mike von Bestenbostel says, I had the IC in Handelsblatt, but this went down from the list. So I'd go to Munich to Mark Hickler, please. Yes, good morning. Today from Halle. I have two questions. Number one, the tapping story, it's nothing to do with the numbers, but of course it brings a bit of unrest, and it's also a bit about the culture. Your take on it, Mr. Witter, is it on a good way now? Will there be criminal charges being placed? How high is the interest to clarify it on part of the Group Board of Management? And the second one, very personal one to you, what about your career planning? Will you stay with the big company, or will you go on as planned? Thank you. Mr. Witter, career planning, yes, that's something which we have been talking about in the family. 30th of June 2021. That's when I'm expected at home, and nothing has changed in this. and I'm sure that during the next few months an excellent solution for successorship will be followed. Now, tapping in, that is a topic that has been rather put to the top levels. We're all interested in it. It's a rather shocking thing. We have brought forward criminal charges, and we hope that with the possibilities that the state prosecutors have, that facts can be established. It was completely shocking to us, and I can be quite open about it, because you don't expect this to happen within the in the group locations, and it's going against each and any standard the group has, and I hope we can shed some light on it. Mr. von Bestenbostel says, ladies and gentlemen, I don't see any further questions just now. Should that be the case? Oh no, hang on, there are two new questions. AFP. Jan Schreiber, please. Yes. Thank you. This is a redirect to Mr. Dahlheim. Do you believe that coronavirus pandemic and the decline in sales, does this make it easier or more difficult to achieve CO2 targets in the next few years? Answer, well, the answer is the one and the other. Why so? Well, because of the corona pandemic, we had to delay certain startups. We lost MEB volume that we could have produced earlier, which makes it a bit more difficult to the situation forward. If what we don't hope, if the corona pandemic should lead to a reduction in car sales in percentage levels, this leads to less ICE engines being sold. That helps in reaching CO2 targets, because we take it that the electric cars that we sell them as they are in our budget. But I hope that you don't understand that I would think this should happen. But yes, it would help. Mr. von Bestenbostel, Robert Bender from Wall Street Journal, please. Ms. Bender, please. Good morning. I wanted to ask for the trend in June. You said a lot more lively customer demand, positive in Western Europe. I wanted to ask you, can you tell us in how far this comes about in the United States or in other markets? Do you have similar positive trends there? The short answer is yes. In all of the markets, with the exception of South America, we see a recovery. In China, it's most clearly visible, but the angle is not as steep as in Europe. United States did not plummet that much. We went with a minus 80% in the worst phase, but only at minus 50. But the United States is stabilizing at a very lower level of minus 20%, whereas in Europe, as we said, we take it that we'll probably come to one-digit difference in percentages. And the development of the pandemic in the United States, we all see the possibility of giving a forecast is probably even more imprecise compared to Europe. Stabilizing, is that for June and July? Yes, exactly. That's the indication that I can give to you for June and July. Thank you. And then we have Mr. Hetzner again. Mr. Hetzner. Yes, thank you. Now a couple of questions on financing. You gave a hybrid bond. You have a hybrid bond, 3 billion in June. Do you see a further necessity course of the second half of the year to get money from investors? When you take a look at your net liquidity, maybe you can give us some indication as to how of the 18 billion end of June, how much comes from various hybrid bonds and how much actually stays in your coffers or is in your coffers. And on the diesel issue, how much cash flow do you expect to happen this year for further diesel-related issues? And I'm specifically relating or referring to cash and not provisions. And brief question to Mr. Dahlheim here, out of curiosity. Have you seen any type of signal in the market once the EU summit has happened and the decision was taken on a recovery program to the tune of 750 billion in some form or shape? Did that give more confidence to the markets, or can you not see that from order entries, for example?
Mr. Hetzner, let me take your second question first. A cautious yes would be my answer. I mean, we don't see any spikes like on the stock market where you see that the market will respond within a day or two. But what we have seen is that especially in the southern European countries that were hit by the pandemic, but also the UK, the result of the EU summit will spur a positive recovery. So yes, I think this has helped us to strengthen that structural recovery. Clearly, that has been seen. Mr. Witte speaking. Mr. Hetzner, you had a couple of questions on cash and funding. As far as the diesel outflow is concerned, the actual outpayments in the first half of this year we had 1.6 billion euros, and we expect for the second half of the year an amount of 2 billion. So that will add up to 3.6 billion euros for the whole year. This is something we're planning for and what we expect. Now, you know, hybrid bonds for us for a while have been an important instrument, also because it has an equity effect that it can create, but also because it means diversification on our portfolio. And today we're not planning to issue additional hybrid bonds. The overall stock of hybrid bonds is 15 billion euros. And of course, we are planning to inform the manual and capital markets with commercial paper and senior unsecured instruments and move out to those markets as part of the normal refinancing our financial services business. Well, follow-up question, if I understand you correctly, that then the net liquidity of the automotive division of 18.6 billion euros, you said, out of which 15 billion comes from hybrid bonds. Is that right? Answer, yes, that is correct. If you want to net that amount, but the money from earlier tranches is not physically there anymore because there's just one funding pot. But if you want to do that type of reconciliation, then that is certainly correct. Thank you. And then we also see Marco Engerman from DPA, please. Next. Good morning. I'd like to follow up on the diesel issue. You mentioned some 7 or 8 million euros. Can you see that? Is that declaratory action, what the reserve is for? But is that a contingency for more court cases? Okay, we'll be with you in a second. Mr. Witte, the additional special items are exclusively related to the known legal risks that are in the context of the diesel issue. So no additional issues, but the existing legal ones that are summarized under the diesel heading. Nothing going beyond that. Okay, follow-up question. I thought the declaratory model action was already on the books. Answer? Well, we have seen more legal rulings now by the Federal Court of Justice, which we need to bear in mind as well, of course. The declaratory model action related cases have already been paid out. Thank you. All right, and now we have another question from Christoph Rauwald of Bloomberg. Mr. Rauwald, please. Good morning. I'm asking this question from Frankfurt. In fact, two questions. First to Mr. Dahlheim. Inventory is something you talked about earlier. Can you say a word or two about the latest update? Now, how will your inventories have an impact on pricing, especially in Europe? And a question for Mr. Witte. In the first quarter call, you talked about Navistar. Is there anything you would like to share with us in terms of updating us on Navistar? Have talks about the takeover bid have made any progress, the talks, and when can we expect a decision on the takeover bid on Navistar? Good morning, Mr. Raveld. Mr. Dahlheim speaking. You're right that in March and April we had high stocks and therefore had to reduce production and because we're not selling vehicles anymore. But as Mr. Witte said, we have smoothly ramped up production again in June and July. So we come now in July to stocks of inventories that are well below of what we had budgeted and are corresponding to the normal sales situation. So in a way, they're on an ideal level when it comes to inventory. So we don't see any excessive level of selling off vehicles. Now, of course, it's true that many dealers have actively advertised vehicles in June and July. But if you look at the current numbers in Germany, we're slightly below inventories of last year. Second question, Mr. Witte. Mr. Robert, you asked about the Navistar transaction. My answer, therefore, would be very similar to what you've heard at the last call. Currently related to the Corona pandemic, we have put things on the back burner here. The offer is still on the table and is being assessed, but in the last months, very little has happened because of the pandemic. But other than that, nothing has changed to the conditions to what I've told you in Q1, so nothing else I can add on top of that either. Thank you. Now, ladies and gentlemen, we don't have any more names on the question list. Thank you very much to all of you for joining us today. We would like to wish you a good day. And for those of you who are heading to their holidays, enjoy those coming days. Please return home safe and sound, and or please stay healthy. Thank you very much and goodbye.